Mhm. Oh, it says you're self-muted. Okay. Can you unmute? Oh, there you go.
Morning,
Okay.
Jeanette.
Hey, how are you doing?
I am not a person you want to mute, believe me.
Look, I had to mute you because you left your mic on when you first came in. And
Yeah,
there's a
I'm
bunch
sorry about that. You know,
of
you get up
noise in the
early
background.
in
No
the
worries.
morning. I was at a VC party last night. I must have heard 100 different pitches, so I pretty much got wiped out.
I hear
I
you.
love it that you think my hat is cute.
It's so cute. I don't
I got it in a flea market in Paris. It must be 70 years old or something. Almost as old as me.
We can call it vintage then, right? Is that whatever
I'm
makes
vintage.
vintage?
I
I
can
don't
only wear
know.
vintage.
All
All the
right.
stuff I bought new is now vintage.
Faux show it is. Vintage. What a word we use these days. All right, so it's your hour, buddy. Take it away.
Thank you. So rotation is the name of the game. Welcome, everyone. This is John Thomas, the Mad Hedge Fund Trader, with you today with Toast to Traders, hosted by TradeThirsty. I've been working with TradeThirsty for many years. They're a very nice bunch of people, and they throw one heck of a party at the end of the year. Hope to see you then, Jeanette. I'm broadcasting from foggy Silicon Valley this morning, investment capital of the universe, and I will get on with the show. So why listen to John Thomas? Well, 50 years, I'm going to have to do it this way. 50 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo, and later the White House. Having some White House experience is kind of handy these days. I'm having to explain constitutional law to quite a few people, especially foreigners overseas who don't understand our system. I spent 10 years running the international equity division at Morgan Stanley. Little vacation as a Marine combat pilot in Desert Storm, still setting off metal detectors from that one. 10 years running the first international dedicated hedge fund. And this is back in the days when there were only 20 hedge funds in the world compared to 10,000 that you have now. Then I sold my fund, did fracking for natural gas in Texas. That was the late 90s. Now I've spent 11 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still breathing and working. This is the other reason to listen to me today, Trade Alert Performance. This is an independently daily audited performance of our Trade Alert service. Notice that every month is in the green. We've had actually 14 consecutive up months. Year to date, we're up 25.34% compared to 7%. That's actually now 8% for the Dow average. Trailing one-year return, 54.28%, 301% over 9 years, and that gives us an average annualized return of 34.79%. This is the performance you could die for, and this performance can be yours. This is the trailing 1 year, and we basically make money whether the market goes up, down, or sideways. We had a huge up month a year ago because we went long the market when at the low of the year, and that paid off quite a lot, actually 18% in 1 month. Notice that we have no drawdowns. We stop out very quickly from losers, and this is a typical hedge fund performance. If you think I was just lucky last year, well, look at the last 9 years. Again, it's the same kind of performance with no major drawdowns. Moving on, the method to my madness right now, the risk reward for the markets is now terrible. You are buying at the market that has gone up for 9.5 years in what is probably a 10 or 10.5 year bear market. You know, the consensus among strategists now is that the next bear market starts anywhere from the beginning of 2019 to the beginning of 2020 at the latest. So whenever you put on positions, you have to have offsetting hedges to mitigate your risk and allow you to extract the maximum profit. Whether the trade war is on or off cannot be predicted. It's a fool's game trying to trade around that. It's not worth betting for or against. Rotation in defensive stocks is typical of market topping action, but it can take 1 to 2 years for markets to top. Often hedge fund traders go short way too soon at market tops. then get stopped out or go broke and then watch the market crash. Dollar hitting a new high crushes all foreign currencies. Rising rates will keep pushing the dollar up. Fed has basically promised us 4 more rate hikes in the next year. Rising rates are also say that precious metals and yield plays are dead on arrival. Poor August liquidity. All that said, I expect the S&P 500 to be up 10% by the end of the year, which means it has another 3% to go. But expect more volatility. And the screaming buy of the day out there is to buy the VIX down at the 11 handle, and we're going to be laying on some long-dated VIX calls next week. My passion of my life, besides trading, is flying vintage aircraft. If you're wondering why I'm such a good mood in that picture, it's because I'm doing aerobatics in a P-51 Mustang. If you don't know what a P-51 Mustang is, that's it. This particular one shot down 3 German fighters in World War II. And whenever I get tired of flying a P-51 Mustang, which is almost never, I go fly a World War II British Spitfire, the plane that won the Battle of Britain. This is flying over the White Cliffs of Dover, where it's based. This is the secret to our success. This is the Mad Hedge Profit Predictor, a market timing index. It's an artificial intelligence-driven algorithm that analyzes 30 different technical, economic, and momentum indicators. On Friday, we are reading at 69. It's in sell territory. The best selling point actually is when this index gets to 80 or above. We're close to that now. The best buying is when we get to 20 or below. And in February, we had a lot of single-digit readings. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. Approximately 90% of all trading in the market is now done by algorithms. The remaining 10% is done by individuals who, for the most part, lose money doing it. Does the work of a seasoned 100-man research department in seconds. It runs real-time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 30 times a day. Yeah, that's what our algorithms do, and I'm checking it many times a day. I have it sitting on my homepage so I know what the direction of the market is. Go to the gunfight with a knife, you will lose if you're trading against algos alone. Algorithms provide you with a defined, systematic trading discipline that will enhance your profits, which most individuals don't have. We will provide you that to you if you subscribe to our service. This is a history of the market timing index over the last 3 years, and you can see the volatility of the indicator. We got lots of buys and sells every year, enough to do 2 or 3 or 4 complete round trips in the market every year. That gives us a ton of trading opportunities, both on the short side and on the long side. Just to show you how our indicator does over time, this is how the S&P 500 index has done over the last 3 years, up 59.44%. Yes, it's been one heck of a market. Never really did touch the moving average on the long-term charts. And in fact, we're breaking out to the upside of a long-term channel. This is how we've done over the exact same time frame, up 113.77%. That's double the S&P 500 performance with a lot less volatility. And cutting the volatility of your portfolio is important because it prevents you from panicking and selling out from bottoms or panicking and covering your shorts at market tops. Another really bad retail habit. Global economy is uneven, to say the best. Tax cuts and deficit spending have another 5 months to work their way through the system. After that, it's gone. Won't be there anymore as a market supporting influence. Almost all economic data now is strongly positive. July CPI is at 2.9%, a decade high. Retail sales are up a hot 0.5%. Small business optimism is at an all-time high. In 9 months, we've gone from a global synchronized recovery to a U.S.-only growth as America sucks growth from its allies. That cannot last and will signal the market top and the end of the bull market. Strong dollar is demolishing emerging markets from China to South Africa. Commodities will keep collapsing as long as the trade war continues, and we have a guarantee of a Fed 25 basis point rate hike to a new 2% to 2.5% range in September. Yes, you will finally get money on your checking account, and cash is starting to become a new investment strategy. Yes, remember cash used to pay you 6% like 20 years ago? Yeah, it's coming back. Another good economic data point, one I follow every week, weekly jobless claims, comes out 8:30 every Thursday Eastern, and it is at an all-time low, 210,000. We are at a full employment economy. Even your brother-in-law Harvey can get a job who's probably never worked a day in his life. By the way, if you want to ask me questions, type them into the question box and I will get to them at the end of the webinar. We usually get more questions we can answer, but I will do my best. Soybeans, this is my trade war indicator. You can see that when the trade war started in June, soybeans sold off 20%. They're now kind of bouncing along a bottom. Rumors of progress in trade talks create rallies, failures create sell-offs. So watch this as the likelihood of the end of the trade war. Stocks, what happens when we get trade peace? Well, Bank of America survey says investors are the most optimistic about stocks since 2015. Last week highlighted the risk of trade peace with an out-of-the-blue 600-point rally just on a rumor of trade talks. However, all the buying was in defensive sectors like consumer staples and value. Apple is the only tech stock that has moved to new highs recently. It is now a safe defensive stock. Yes, I've watched it go from 50 cents to $219 and it's now considered safe. Go figure. Start adding trade peace winners on dips. Rotate into laggard value into the next quarterly earnings cycle, and then you can start buying techs again when they start announcing more record earnings. Stocks to buy on the outbreak of trade peace. Here you go. Well, ags like soybeans, wheat, and corn, they're ETFs now for all of these. Ag equipment makers like Caterpillar and Deere, which is the old John Deere, used to drive one of their little green tractors as a summer job. Chips like Micron Technology and NVIDIA. By the way, NVIDIA is moving up to new highs as we speak. Chip equipment makers like Lam Research. Turns out that 80% of Chinese chips come from the United States. That has essentially gone to zero. So when that business comes back, all these chip and chip making stocks are going to roar. China is also the world's largest buyer of aircraft, so Boeing does well after a very long sideways period this year. And you want to buy the big Chinese tech companies like Alibaba and Baidu, which are off about 30% since the trade war began. So yeah, there's your value long-term trade peace portfolio. Buy them here. They're all great value for money. Caterpillar, and this shows you where our market timing index kicks in. We got a buy signal there last week. Already got a $10 move. Looks like it wants to go higher. Deere and Company, again, same deal. Got the signal here on this double bottom here and here, and that is very strong support. We may get some more bounces around here, but eventually the breakout is upside, probably going into the election. And Micron Technology, we've been a very active trader. We also have another newsletter called the Mad Hedge Technology Letter, and we've been in and out of this one several times this year. Got the last buy down here at 45, sold at 65. We're now going back into that. If on the next announcement of trade peace or any improvement in trade discussions, then we get another move from 45 back to 65. That's a 35% gain, people. Not shabby, especially since you get to do a round trip every 3 months. Alibaba also down at a very low level. Again, the same double bottom. Actually, it's a triple bottom here. And they just announced 61% year-on-year growth earnings. This is the Chinese company. That's the combination of Amazon, Google, and PayPal, selling to a market of 800 million people. S&P 500, we are running a double top risk right now. Here's the high we made in the end of January. This is the high we made on Friday. If we can't decisively break through here on big volume, then we are going back down to test the bottom end of the range, which is down about 10% from here. However, given the massive excess liquidity around the world, there's about $50 trillion in cash around the world. My guess is that we just keep melting up going into the next presidential election. Sorry, next congressional election on November 7th. Yeah, occasionally I have to remind myself what year it is. Dow average, we got a new high here and a very solid uptrend channel. Russell 2000, new highs here. And this is the sector that benefits the most from tax cuts. Most S&P 500 companies don't pay taxes. More than half of their earnings are parked overseas. So the small, local, domestic U.S. companies, they get the full benefit of the tax package, and that's why they've been leading the market really for several months now. NASDAQ, we're kind of settling into a sideways range here. Don't expect big moves in this until the next earnings cycle. Until then, buy the trade piece stocks or buy value stocks. Facebook, we've been very active in that this year. Bought the lost sell-off down to 150. Sold when it hit 200. We got a short squeeze after that, and then they announced earnings, and kabam, down 20% in one day. So we missed that hit. In the meantime, these are all the trades we made money on. This one we got stopped out of earlier in the year when we had this bigger sell-off. Google, this is one of your correction, Alphabet is one of your correction-proof stocks. There's so many people trying to get into this. It's one of 3 or 4 stocks that in technology it won't correct no matter how bad conditions are. And we've been in this one since we got the buy signal here at 1,000, another buy signal here at 1,100. And notice we haven't had any sell signals in this stock this year, so we caught the run up to the new all-time highs. NVIDIA, same deal, only buy signals, one here in April, one here right now. And again, this chart's a couple of days old. I know we're back up to 270 again already since the earnings came out. What put this stock to sleep for a couple of months were the trade wars and the collapse of Bitcoin. About 20% of their sales of graphics cards last year were to Bitcoin miners. Now that Bitcoin has gone from 20,000 down to 6,000, that business has gone to zero. Salesforce, another pullback-proof stock. Close your eyes and buy. Expect to double in the stock from here before the bull market ends. Got the buy signal here in April. Another buy here in May, and we haven't had any sells yet. These are essentially double up calls. Buy here, W position there, and it's been a huge moneymaker for us. And the guy who runs the company is a wonderful person. Industrials getting a nice little rally there. They're a value rotation target. Tesla, I've been staying out of this year. I originally got into this stock at $16.50 about 10 years ago. Got out at $3.90. I've been sort of watching in amazement ever since. It's a stock that you want to watch, not trade. Buy the cars, not the stock. This is my latest Tesla. That's the new Model X SUV. 0 to 60 in 2.9 seconds. I have to carry air sick bags in the car in case people throw up when I go 0 to 60 in 2.9 seconds. Being a combat pilot, I'm immune to motion sickness, but kids usually aren't. My last Tesla didn't do so well. This is one of the first one ever made, chassis number 25. Even the best design in the world doesn't work against a drunk driver on Christmas Eve who tail-ended me. So I got a new Tesla out of this, and we also completely tore the car apart. Look at the honeycomb in the wheel wells here. That's a shock-absorbing design, and that's also carbon fiber. And here's the battery package. Yeah, That's how small the battery is that'll get you 320 miles right now. Moving forward, transports, XTN leading the rally there. And of course, the two Buffett favorites are Southwest, LUV, and DAL. They have been leading the charge to the upside. Healthcare, we turned bullish on this in the spring, didn't participate because the tech stocks then were still too hot. And obviously, we're getting major moves there with Pfizer leading the sector there. Goldman Sachs, we've stayed away from banks all year. My view is that banks are undergoing a massive structural change and disruption from fintech, and they will not recover from that. That's why banks wouldn't go up even though interest rates were going up, which is supposed to be great news for bank stocks. So our last trade was a year ago. We stopped out of the October call spread. Haven't gotten back in. There are just too many other better things to do in technology, biotech, and pharma to waste your money on financials, which are a dying industry. They're basically the buggy whip makers of 2018. Palo Alto Networks, we've been in for a very long time. Got 3 buy signals recently on that. One down here at 165, one down here at 185, another one here at 190. Hacking never goes out of fashion. In fact, hacking just keeps getting better and better. I mean, guess what's going to happen going into the next election? There's going to be hacking like crazy. So we're keeping our long position in Palo Alto Networks, FireEye, and a couple others. Consumer discretionary's got a new high here. That's a classic defensive sector. And this is being dragged up by Disney, Amazon, and Home Depot, where we had longs on all 3 of these. I've avoided the others, and we just had a nice profit on Home Depot. Came out around cost on Disney. And of course, Amazon has been a home run for the centuries. Emerging markets getting completely destroyed by the strong dollar. That's going to continue as long as the dollar is strong, which will be at least another year. Energy, trade war is also hitting the energy markets. Slowing global economies put oil demand into free fall. With peak seasonal demand behind us, the outlook for oil and oil stocks is not good. Update that to terrible. Iran's oil is now going to China, so they can completely bypass American sanctions. There's nothing we can do about it. Saudi Aramco deal is dead. The Saudis were only interested in selling their oil franchise when they thought the price of oil was going to zero, which it will someday, just not for another several years. Bottom line, oil is peaked, so stand aside. Here's ExxonMobil, one of the most widely held stocks in the United States, held by widows and orphans. They own it for the 4.19% dividend, but it is not immune from falling oil prices. Oil, here's your oil chart. Close to a bottom here. Don't want to touch it. My view is that we eventually break this 60 bottom right here. Energy Select also doing terrible, major breakdown here. Held the first time at the 200-day moving average. We'll see if that lasts. Halliburton, oil service stocks also getting slaughtered. Don't want to touch. You may want to buy this someday lower down because oil will eventually come back. And copper, new lows for the year, major trade war victim. China's the world's largest consumer of copper. They use about 48% of the world's copper. And when you slow down the largest consumer of copper, that is bad for copper prices and the producers like Freeport-McMoRan. Precious metals, the U.S. has been selling to the rest of the world. It's been a complete disaster. Rising overnight interest rates continue to crush gold, even though long rates have been stagnant. Flight to safety bid is gone, as it is for the Japanese yen. Russia, China, and Europe are the only gold buyers. U.S. is the seller. Venezuela is still hammering the market, dumping all their gold reserves, but they only have about $6 billion left to sell. Bitcoin is stealing away speculative activity, even though it is falling faster. Bottom line, stand aside all precious metals and commodity plays. You don't want to own them during rising interest rates and during trade wars. It's a double negative. Here is gold. That's a no touch. Here is the gold miners. They are much worse, down 30% in the last 2 months. And here is Barrick Gold, also another disaster area. This thing was trading in the mid-20s a year ago. It's dropped by more than half in a year. So watch this for an upside bounce, but I don't want to touch it right now. Real estate is rolling over. If you haven't sold your house already, it may be too late. Home affordability hits a decade low thanks to rising prices and interest rates and soaring construction costs. July housing starts up only 0.9 versus 8% expected. Tariffs are causing material costs to rocket. When your lumber cost goes up 25%, that increases the cost of your home by about $11,000. New mortgage applications are falling off a cliff. Construction stocks have been in a bear market since January, so that's the writing on the wall. In June, 14% of all real estate listings saw price cuts. That's the highest level in 2 years. And Chinese buying of West Coast homes has completely vaporized. They were at the 1.1/3 of the entire market, and they only bought for cash. S&P 500 Case-Shiller maintains a strong 6.5% year-on-year price increases, but that is a 3-month lagging indicator. Bottom line, stay out of real estate for now and sell your home if you're worried about another real estate crash. Here's the S&P Core Logic. We've been grinding up for about 4 years now at a 5 to 6% rate, but a downturn may be just ahead of us. Seattle, Las Vegas, and San Francisco, far and away the hottest markets in the country. U.S. Home Construction Index, the ITB, sitting at its low for the year, been in a bear market all year. So what do we do about all this? Well, stocks are topping out, rotate from tech into value. Bonds sell any and all rallies. Commodities stand aside. Currencies sell rallies in currencies. Precious metals stand aside. Volatility goes short on run-ups to 20. Buy the dips down to 10 and 11. Real estate stand aside. If you're not up 54.28% in the past 12 months as I am, you are reading the wrong newsletter or following the wrong trade mentoring service. Here's my very long view, the very, very long view. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. In the meantime, central banks will bridge the current demographic slowdown with aggressive monetary and fiscal policy. And that is me where I work every summer in Zermatt, Switzerland, watching people come down from the Matterhorn. Here is the Dow average from 1982 to 2000. It went up 20 times in 18 years from 600 to 12,000. Anything you touched then made you look like a genius, especially the stock market. We are going to have a replay. If we get the same replay that we had from 82 to 2000, where does that take us? How about 120,000 in the Dow by 2027? Yeah, that would be a 20-fold return from the 6,000 bottom at in 2008. Notice the 82 bottom was at 600. The 2009 bottom was 6,000. So get the same kind of return, except this time we're going to 120,000 instead of 12,000. That 10-fold increase in the index reflects the intervening 30 years of inflation. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry of 54.28% in volatile markets. Follow my research and market beating trade alerts and you will rake the profits in. And again, here's our trade alert performance, 54.28% in a year. This performance can be yours, or you can make more than this, as many of our customers do. And by the way, type your questions into the question box. Oh boy, I see a couple hundred questions already. So I will get to you shortly in the questions. Just let me finish the rest of this. Let a Marine combat pilot steer you to big profits. And no, that is not the plane I flew in Desert Storm. That is a 1932 de Havilland Tiger Moth, which only lands on grass. And by the way, the gas tank sits right on top of your head. So you really don't want to flip over that plane. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. You can see we're playing all asset classes, long and short. We bought the S&P 500, made a quick 16%, sold short treasuries for 8%, bought the Russell 2000 for 14%, bought Amazon, bought Apple, bought Biogen, but got stopped out the next day because of a certain tweet. But we came back strong, buying Palo Alto Networks, selling short the Japanese yen, selling short treasuries, buying the SPYs, and buying gold again. This is how it works. I issued a major artificial intelligence report and followed that up with a trade alert. Then NVIDIA was selling at $68.57. Yes, you're thinking, where was I when NVIDIA was at $68? We sent out a trade alert that said buy NVIDIA shares at $68.57. These go out by text and email, so you get them about 5 seconds after we send them out. And by the way, we don't care about the cost of text alerts. It's more important that you get in fast and make money. We had a 10% weighting of our portfolio in there, $10,000. That meant you had to buy 146 shares of NVIDIA. What happened? NVIDIA went up 78.5% in 2 months. In fact, it's done that several times since we've been in it. We sent out a trade alert that said, take profits, sell NVIDIA at 120 share or best. Closing trade, the profit we made on this was $7,508 in 2 months on a $10,000 investment. So if you want 200 of these a year, listen on. We'll show you how to get it. With my Global Trading Dispatch service, you get a daily research newsletter, instant trade alerts sent out at market sweet spots, about 200 a year, and the reasons why you should execute them, live bi-weekly strategy webinars with a Q&A, special reports on urgent investment topics like artificial intelligence, invitations to strategy luncheons around the world. We do about 25. I just did luncheons in London, Paris, Amsterdam, and Zermatt. More educational videos and webinars than you can consume in a lifetime, access to a 10-year database on trading ideas, and I'll even give you the name of a good surfing camp in North Africa. By the way, it's a lot harder than it looks. Ouch. Here's what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients. They're happy to pay it because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as an investment 911. And I'm not going to charge you $5,000. That's what people pay for our advanced options trading service. And I'm not going to charge you $3,000. That is the highest price you'll find on our website. Today, only through this webinar, you get the deal of the century. Creating this product cost me millions of dollars. With the best customer support in this industry, running it costs millions more. Today, and only through this webinar, you can get a 3-month trial subscription for just $497. We know when it comes to subscribe, you'll happily pay the full $3,000 because you've made so much money. In fact, 90% of our subscribers cover the entire cost of their subscription on the first trade. So to get to our dedicated sales page, just click on the chat box on the right. Jeanette, you should put the link to our sales page in the chat box so people can click on it. This is a limited time offer. We take only 25 new subscribers at a time because we don't want to impact the market too much with too many new people following our trade alerts. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. Let me make the money for you to pay for your subscription. You make the trades in your own online trading platform. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. We told you which stocks to buy during the Trump melt-up. Who will tell you what to do during the coming meltdown? By the way, we make a lot more money in falling markets than we do in rising markets. Most people can't do that. Just click on the chat box on the right, and that'll take you to the sales page. Okay, let me go through. We have a few testimonials here, and I'm going to start going through the approximately 146 questions that we have. Okay, Richard in Detroit, Michigan asked, you always give out the exact number of shares in your alerts. Why do you do this? Richard, the reason is we want to make these alerts so simple that they're devoid of the thought process. We want you to be able to just say, hey, buy 146 shares, go, get it into your online trading platform. You can execute immediately. There is no delay. Okay, Susanna, Land O'Lakes, Florida. Do you recommend ETFs to trade in those sectors or just stocks and commodities? Susanna, every trade alert has a range of choices for you to choose from, including alerts for stocks, ETFs, and options. That way you can tailor every trade alert to your own trading style and risk tolerance. Okay, Joseph in Sun Valley, South Africa. I'm interested in what you see for the South African Rand and why. Should I go into cash or pivot more to U.S. markets? Well, Joseph, the dollar's going up for a year, so if you have any excess Rand sitting around doing nothing, I would convert them into U.S. dollars and look to come out sometime next year. We're raising interest rates. You're not. Period. End of story. The interest rate differentials are far and away the largest drivers of foreign exchange rates. Okay, let's see. Marcus in Albany, New York. John, I'm in. Can't wait to start. Thanks for the discount offer. Marcus, thank you very much. It's people like you make all the hard work pay off. This is my retirement, and I love every second of it. Bill in Annapolis, in Maryland, do you think oil is a short now? What ETF should I be trading? Bill, the ETF for oil is the USO. That's Uniform Sierra Oscar. We're kind of in the middle of a multi-month range now. Not a good place to do anything, but I would be sellers on any big rallies from here, and I don't really want to buy oil until we get down to the 50s. Let's see, Danny in Brentwood, Tennessee, must be a neighbor of yours, Jeanette. John, I'm taking the discount. I have lost money on every service I've ever taken, but you look like the real deal. Thank you very much. Well, thank you for the compliment. Just click on the chat box, and that link will take you to the sales page. Jeanette, I can't see the box. Is the link up in the sales page? Link up in the chat box? I can't see it. Okay, moving forward. Let's see. Victor in Tempe, Arizona wants to know, are your alerts delivered real time, and how many can I expect per month, per year? I'm a swing trader. Well, Victor, so am I. And as you know, the market doesn't offer you sweet spots every day of the year. So we'll do a bunch of trade alerts, sometimes 2, 3, 4 in a day. Then we may go several weeks without one because we're kind of in the middle of the range. And then we peak out and you'll get a bunch more trade alerts to take profits. So that's the way it goes. It's sort of hot, cold, hot, cold. There's no law that says you have to be trading every day of the year. The only person who wants you to do that is your broker who gets the commission. Let's see, what else do we have? Okay, I'm just very quickly going through these questions. Jim in Palo Alto, California. Are you an algorithm? No, but if I knew a good machine noise, I'd make one. All I can say is come to one of my strategy lunches and find out. If you pinch me, I'll bleed, but you might also get a punch in the nose. So better just to shake my hand in person. And I love meeting people at these luncheons. That's often where I get some of my best trading ideas. Okay, let me move on to another testimonial here. I work about 4 months a year out of Incline Village, Nevada on Lake Tahoe, and I always get my best ideas when I'm hiking uphill with a 60-pound pack. Ivan in Portland, Maine, how would you describe your trading philosophy? Ivan, I use fundamentals for my long-term call and technicals for my short-term execution. That's what every long-term professional does. Roger in Richmond, Virginia, do you offer training with a subscription? Roger, we have more training than you could ever use in a lifetime. Every trade alert we send out has a link to a video showing you exactly how to execute a trade alert in your online trading account. We also have training courses, books, and so on. So yes, you will learn how to trade whether you like it or not. Kicking and screaming all the way, as some people say. Okay, let me look for more questions. I see more questions are piling up. Is the strong dollar over? Nope. With the bond market at this level and interest rates rising at the short end, it's going to keep going up for another 9 to 12 months. Gary in Garden City, New York, what's your best stock pick of the day? Well, you can either buy the Trade P stocks right now as value plays, or buy the correction-proof tech stocks, Amazon, Salesforce, Microsoft would be 3 of those, and Google. There's 4. Take your portfolio, split it 4 ways. It should double in value within 3 years. You obviously have enough money. Why do you do this? Says Robert in Seattle. Well, Robert, why do I do this? This is my retirement. I love helping all the people. Teaching people how to make money and secure their financial future is the love of my life. When I was a broker on Wall Street, I used to see so many people get ripped off. It made me sick. This is my chance to get even and level the playing field. Yes, it's payback time, Wall Street. This is my chance to help the regular guy. This is what
all discombobulated.
You're muted. Hello. Okay, got a little background noise there. Someone else must have just logged in to speak. I committed the same sin. It's easy to do this time of the morning. Another testimonial here, and this is me in New Zealand on one of my trade lunches. Those are real black swans. Notice I'm keeping my distance. They bite. Yes, black swans bite. Who knew? I'll keep going through the questions, and I see the number of questions keeps increasing. Yikes. Okay, we're up to 152 now. Bill in Portland, Oregon, can we talk to you directly? Yes, Bill, I spend part of every day calling followers and talking to them about the market and finding out their needs, get some of my best trading ideas from them. And you can email me anytime at support@madhedgefundtrader.com. Happy to answer your question. I love answering the questions because it shows me what I'm missing in my own research. So email me at support@madhedgefundtrader.com if I can't get your question today, and I'll happily answer it. Dan in Topeka, Kansas, what's the minimum amount of money I can start with? Dan, I'd say $10,000 to be safe. What I often tell people to do is when you're brand new to the service, start paper trading with pretend money. And when you see that it makes money, start using real money. Everyone has to adapt this program to their own specific needs and risk profile. We do have students trading out of dorm rooms with minimum positions, which costs about $400, and they're working their way through college that way. So the real minimum is really $400. Let's see, Joe in Detroit, Michigan. I've never done this before. Can a beginner start with no prior experience? Absolutely, Joe. Bringing beginners into the market for the first time is one of the primary goals of this service. When we first started up 11 years ago, Detroit was going bankrupt, laying off people like crazy. So we did get a lot of unemployed assembly line workers signing up, learning how to trade. That forces us to write our alerts as simply as possible. And it turns out billion-dollar hedge fund managers like reading simple to read research also. And we've kept it that way ever since. Joel in New York City, when is the newsletter sent out? Every day the market is open, Joel. Usually have 2 or 3 trading ideas per newsletter. It's posted at midnight Eastern, so it's in your box first thing every morning. Okay, let's keep going on to the questions. Okay. Okay, just scrolling through these to see which ones make sense. Are financials cheap? Wants to know Arthur in Miami, Florida. Answer, they're cheap relative to the rest of the market. They're nowhere near as cheap as they were in 2008. Remember, Bank of America went from $5 to $35. So buying it up here, it isn't so cheap. And remember also, they have a structural headwind ahead of them as thousands of little fintech companies are eating their lunch. I think eventually the big banks, the big national branch networks will disappear. I'd rather focus more on growth industries than dying industries. No buggy whip makers for me. Let's see. Are the airlines good to buy here? I probably would say yes on that. Again, you want to buy Southwest and Delta. In a full employment economy running at a 4.1% GDP rate, every airplane in the country all the time is full. And as you run through airports a lot like I do, you'll notice that every flight has a waiting list. So that is a great time to own airlines. Plus, you just had a $10 drop in the price of oil, which helps them with fuel costs. And they're also huge borrowers. So interest rates staying a lot lower than anyone expected for longer. Also very positive for the airlines. That said, it's your worst industry to own in a recession. Okay, what do you think of biotech? Bill, I would say of the two sectors you really want to own for the rest of your life, they are tech and biotech and big pharma. These have massive structural tailwinds, huge earnings growth. I think all forms of cancer will be cured within 10 years. That's $1 trillion a year in potential profits for U.S. drug companies. All of these cures are being invented here. So tech and biotech is where you want to go. And the two, in fact, are feeding off of each other as, biotech uses more new tech to move cures forward. Oops, we just lost our PowerPoint. So let me go back in here. Yep, that's rotation is the name of the game. Let me go down to the very end here. Okay. Slideshow. Okay. Jeanette, can you see my page up there? Okay, I'm just going to go.
Hey, I can hear you. I can hear you.
Okay, can you see me? Okay.
Yep, I see your PowerPoint.
Okay. If you subscribe to our service today, you will get a free copy of my book, Stocks to Buy for the Coming Roaring 20s. It's in our store now for $49. You can have it for free. These are sectors and stocks that will lead the market for the next 20 years. And by the way, some of them have already doubled. So buy them before they double again. If you click the link to the sales page on the right, that'll take you to this landing page, which talks about me. Click this button down here at the bottom. That will take you to our sales page, which looks like this, which you can then enter the order. That's the page for the usual price, which is $19.98. You can have it only today for $497. Yes, it's a deal that we rarely offer. We also have a conference coming up on October 26th at Lake Tahoe, Nevada. Come meet me in person. this is a chance to rub shoulders with the people who've made the most money from our service over the last 11 years, and you can trade tips with them. Tickets range from $5.99 to $17.99, and it's the most beautiful place in the world to have a conference. This is what a trade alert looks like. We did this just a few weeks ago. It immediately made profit. We bought the bull call spread at $4.10 to now worth around $4.95, and the stock went up about $15. If you want 200 of these a year, just sign up for our service. 3 months for just $497. Here's the offer you can't refuse. If I don't get to your question today, email me at support@madhedgefundtrader.com, and I'm going to keep going until we run out of questions. Let's see. Would you still pile into Amazon? Yes, I would. It's one of my few close your eyes and buy stocks. Amazon has a half a dozen other industries, each of which will eventually grow to a $100 billion a year earner on its own. I'm talking about food, Amazon Web Services, healthcare, and so on. So Apple won the race to $1 trillion. Amazon will almost certainly win the race to $2 trillion, and then they may split it up, sell off the components individually, and collect huge premiums on the sales, and you may get another double after that. So yeah, Amazon screaming buy on the long-term basis. What do you think of small caps? I'd buy them here. They could rally till the end of the year. They benefit the most from the trade tax cuts, and also being small caps, they need the least amount of money to push them up in price. It's not like you're trying to push up Apple or Amazon. And by the way, the Russell 2000 only has about 1,600 stocks in it. That's because 400 have disappeared from mergers and acquisitions, bankruptcies, buyouts, and so on. Is Facebook cheap here at $175? I would say no. Facebook is currently changing their business model. They offered awful guidance for the rest of the year. I think when those earnings disappointments hit, that's when you want to look at Facebook, not right now. Let's see. Reading this. Do you see inflation accelerating through the end of the year? Yes, I do. The trade war induced import duties haven't hit the economy yet. When they do, prices will start going up a lot. A lot of small companies in the United States use Chinese parts. They're little tiny parts that you've never heard of, which are only made in China. There is no U.S. competitor for those parts. So when they get the 25% price increase, they will pass it on to you. Most people are operating on such thin margins these days, they can't eat price increases like they used to. So those will get passed on to you. That will create inflation. And when the Fed sees that inflation, it may accelerate their pace of interest rate rises. That will trigger the next recession and bear market. How about that for a long answer to a short question? Okay, more questions. Yikes, I see we still have now 167 questions. What's your view on platinum, short, medium, and long term? Short term, platinum is caught in the gold and silver downdraft, so I don't want to touch it. Also, you don't want to own platinum because the move to electric cars, as it accelerates, electric cars use little or no platinum, whereas conventional internal combustion engines use large amounts of platinum in their catalytic converters. They're made out of platinum and palladium. And as Detroit goes down the tubes, so will the prices of platinum and palladium. So not a big bull on that. If you do get a major move up in gold, which will happen someday, then you may get a sympathetic move in platinum also, but it could be a long wait. Do you expect a pullback into the November election? No, not really. I expect any pullbacks into the election to be minor, like of the 5% range. the big driver now is the midterm election, and the market will go up no matter which party is winning. The mere fact that the election is gone and that uncertainty is gone is a huge positive for the market. People will keep buying. That's why markets completely ignored all the negative news coming out of Washington this week and went to new highs. And would you buy Advanced Micro Devices and NVIDIA on the next dip? Yes, I would. Those are two of our favorite stocks. Any thoughts? Daniel's asking, any thoughts on the inverted yield curve? Yes. Inverted yield curve happens when short-term rates are higher than long-term rates. That's going to happen in about 2 or 3 months. That is always a precursor of recessions and bear markets. And at the current rate of increase of rates, you can pretty much count on a new bear market recession starting sometime next year or early 2020. That, by the way, is the leading indicator that both the Fed and most major investors use for timing bear markets. Just reading through this. Yeah, what is your opinion on the bond market? Answer, sell every rally, every 5-point rally, and we've had a 3-point rally off the bottom since July, so we're 2 points away from the next screaming sale on shorts. Okay, let's see. Okay, well, the longer I talk, the more questions I get. We're at 171 questions now. How am I doing on time, Jeanette?
Hey, John, it looks like you have 3 minutes.
3 minutes to go. Let's see if I can get through 3 quickie questions. Here's one. Do you think Trump's legal problems will affect the market? Absolutely not. As this week's market action proved, markets could care less really who is president. Doesn't really affect the market that much. Even if we change presidents, it won't lead to any changes of U.S. law, which means the tax cuts stay in place, and they could stay in place for quite a long time. So that is not a negative that the market is going to have to deal with. However, the only real impact is if we change presidents for whatever reason, is that your Twitter feed suddenly will go quiet. Here's another question. What's your favorite tech stock? Apple is the safe tech stock these days. However, we've just had a tremendous run in a very short time, 150 up to 219. So I would not chase it up here. You get a 10% correction in Apple, and you may get that sometime by the end of the year. I would jump in with both feet and buy it again. Here's another question. Do you think Chinese tech companies are a threat to the U.S.? They are if we go to sleep. But so far, all they've done is copy our technology. And as Japan amply showed in the 90s, you cannot copy your way to leadership. Okay, next question. What's your win rate on trade alerts? Over the 11 years we've been issuing these, the success rate's right around 90%. We always stop out very quickly on the losers because I'm too old to lose all my money and start all over again. And Morgan Stanley probably wouldn't take me back anyway as a junior trader. Okay, let's look at the... I just joined a second ago. Will there be a recording? That is something Jeanette can answer. And I think the answer is yes, isn't it, Jeanette?
Yes, barring any technical difficulties, the recording will be posted on the TradeThirsty homepage probably Monday afternoon.
Okay. All right. Well, I think my time is just about up. If I couldn't get to your question, email me at support@madhedgefundtrader.com. Would love to answer it. And this is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.